A recession does not mean a housing crisis. When talks about a possible recession, those looking to buy or sell a home this year may be hesitant about moving forward under the current market conditions. Let's set aside any prediction regarding the length and severity of any recession. Let's instead focus on what happens to home prices and mortgage rates in previous recessions. It's important to remember that a recession did not necessarily mean that home prices will go down. Although a recession could be approaching, it won't have the same impact in the housing market as the crash of 2008. It's important to keep in mind that a recession does not always result in a housing crisis. The best evidence we have to prove it is to take a look at the historical data of what happened in real estate during previous recessions. That way, you know what you shouldn't be afraid of and what a recession could actually mean for the housing market today. A recession doesn't mean falling home prices. Looking at historical data dating all the way back to 1980, it is clear that home prices do not fall during every recession. In fact, home prices appreciated during 4 out of the last 6 recessions, as illustrated in the graph below. Therefore, it is important to understand that just because the economy may slow down, it does not necessarily mean that home values will decline as well. Most people remember that the housing crisis in 2008, and that's a larger of the 2 red bars below, and think that another recession will be a repeat of what happened to housing then. However, the current housing market is very, very different from what it was back then. Today, we still have record low inventory. In the past week, we saw just over 400,000 homes available to purchase and not under contract. This is less than half of what we had in 2016 to 2019. And in 2008, we had almost 4 million homes for sale. A recession does mean falling mortgage rates. What a recession really means for the housing market is that mortgage rates will typically fall during a housing recession. As the graph below shows, that when the economy slows down, mortgage rates have decreased. During past recessions, the Fed lowers interest rates to encourage people to spend money and to stimulate the economy. As rates come down, this is your opportunity to refinance at a lower rate than what you purchased with. Waiting to buy will only cause you to chase the market in a record low inventory environment. You don't need to fear what a recession means for the housing market. Recessions create opportunities for home buyers.